You are now listening to The Big Trade with Peter Pham, enlightening conversations for maximum market returns.
Geoff, thanks for coming on to the Big Trade series. Why don't you introduce yourself to the audience?
Well, my name is Geoff Hiscock. I live in a little north of Sydney in Australia. I'm a business journalist and an author. I've written a number of books. I specialise in Asia, particularly Japan, China, India. I've had a very strong interest in India for the past decade. But I guess what started me in this business of covering Asia for various media outlets goes back to the mid-90s. I was working for a newspaper called The Australian, which was the national daily newspaper here in Australia. And it was a time when there were a great many new business names emerging in Asia. China was just starting to pick up speed. Southeast Asia was going well. And suddenly there were a lot of new people on the business scene. And I didn't know a lot about these new names. So I created what essentially was a reference book for myself, and that became my first book, Asia's Wealth Club. I thought it would have appeal to a wider audience. So I set about looking up the histories of these people, their life stories, where they came from, what their ambitions and expectations were. And this is in the pre-Google era. Google didn't exist. I was using a search engines such as Lycos and Alta Vista, and so a Google search just wasn't possible in those days. So a lot of my information came from on-the-ground interviews in Asia, talking to these business people, pouring through company reports, annual reports, any scraps of information I could find. That was how I created my first book, and it was a look at the top 100 billionaires in Asia at that time. The first edition came out in 1997, just in time for the Asian financial crisis. And as you would know, that caused a great deal of pain in countries such as Thailand, Indonesia, Malaysia, and South Korea.
Right. I was just looking at one of the headlines last evening indicating that some of the wealthiest Chinese individuals have been affected recently by actually the decline of their stock prices. So you kind of indicated about the Asian financial crisis. I know you've written about Asia's Wealth Club and then Asia's New Wealth Club. What's the latest, considering it's like the year 2015? What are some key takeaways people can take towards high net worth individuals in Asia?
Okay, well, to answer that question, I need to just go back to the start of the 21st century. After the Asian financial crisis, a lot of people lost a lot of what essentially were paper fortunes on the stock market, particularly in countries such as Thailand, Indonesia, and Malaysia. The Chinese billionaires were only just starting to come on the scene because many of the Chinese companies were not listed, essentially state-owned enterprises. There were a handful of, private companies, but the great number of Chinese billionaires that we see today simply didn't exist back in 2000. At that time, there was certainly a new wave of entrepreneurs in the information technologies sector, mobile phones, the internet space. I'm thinking of people like Masayoshi Son in Japan, Richard Lee in Hong Kong, Azim Premji in India. They were starting to hit their stride, and it was clear that mobile services, mobility, internet always on, everywhere, e-commerce just starting, and these were going to be the big growth areas. And I think that we see that today in the fortunes that are being created in China. You look at e-commerce, you look at Jack Ma of Alibaba. This is the area of growth, not just in China, but essentially in the other big Asian economy in India. But, of course, India is about 10 years behind China in virtually everything that it does.
So do you have any perspective on, because we've talked a lot about some of these bigger countries, do you have any perspective on the rest of Asia particularly Southeast Asia?
Well, Southeast Asia has certainly had a great run over the last 20 years. There have been obviously some hiccups. The Asian financial crisis in 97, 98 certainly set back Indonesia in particular for a long time. But generally speaking, Southeast Asia has done quite well in lifting its people, the standard of living and the per capita income for its people many times over. So particularly because of the engagement with China, Southeast Asian countries are very strongly hooked into the supply chain. They supply to China, they buy Chinese products, they're intimately linked into the Chinese wealth cycle. But the country that I think is the standout example of Southeast Asian achievement is Singapore. It has really made the most of what it's got. Hasn't got a lot. It's got virtually no resources other than its human capital and its ability to create world-class infrastructure. It's invested very heavily in its transport systems, in its education systems, in its social welfare systems, and it's been able to create one of the world's great business and trading hubs. If you look at Singapore Airport, it's one of the world's most important aviation centres, even in the face of the intense competition that you've had from, say, the mega hubs in the Middle East, places like Dubai and Abu Dhabi, and from China itself. So it's invested so strongly in education and investment, in the services sector, financial services, trading. It's made itself relevant every step of the way, particularly for other Southeast Asian nations, particularly for India, the Indian Ocean, and also for the Gulf states.
Right.
But the thing about Singapore is it's vulnerable to external influences too. It's got two very big neighbours, Malaysia and Indonesia.
Right.
And so the way they treat Singapore is obviously very important to Singapore's future and to the region as a whole.
And are there any outliers in terms of Asia that maybe or have been underwhelming economies from your perspective?
Well, I hope Indonesia will do well. It's got 250 million people, and it's a very important economy. It's the fourth biggest in Asia after China, India, Japan. So it deserves to do well, but it's got so many, I guess, infrastructure shortcomings, so many political problems. It's, as you know, it's an archipelago with a great many different groups of people living across those thousands of islands. So just managing that country, governing it properly, is a very big ask for any political figure. And so I think Indonesia has got tons of resources, tons of human capital. It's got a number of good things going for it, but it really has to get its security situation right and its political situation right. It's got to cut down on the corruption, eliminate it if possible, and really get its human capital working to the one big end, and that is the continued improvement of the life of its 250 million people.
So, Geoff, which cities can you envision being the major financial hubs of Asia in the next 10, 20, 50 years from now?
Well, the obvious candidate for the biggest hub is Shanghai. I think there's no doubt that it's just continuing to power ahead, and as a consequence, Hong Kong is lessening in importance, but because of the size of the South China market, Hong Kong will continue to be a hugely important financial centre, not just for China, but for Southeast, for Southern China and for Southeast Asia. Singapore will continue to do well. Tokyo is an important financial centre in its own right, and I think will continue to be important because there's a great deal of wealth in Japan. I think we tend to be a little dismissive of Japan because it just seems to creak along, but really Japan is doing quite well. It's got problems with a declining population, and an aging population, but its commitment to technology, to high quality, that keeps giving it an edge. And so, financially speaking, I think that Tokyo will remain a very important financial centre and a trading centre as well.
So
Other
Geoff,
than those four, maybe Sydney, because it's got an early time slot, can help, I guess, set the scene a little bit as the Asian Business Day begins. But other than that, I think Shanghai is definitely the standout contender. It's already there in many ways.
So Geoff, have you noticed any parallels between market liberalization, I guess free market economies, and the wealth of individuals within Asia? Is there a correlation from that perspective?
No, there isn't. If you look at China, which is a controlled economy, sure, it's opened up considerably, but there are a great many, I guess, billionaires in China who have developed their businesses through some sort of association with the state. You can say the same about Putin's Russia, for example.
Right.
In Japan, the very many wealthy people there have accumulated wealth in most cases through hard work, but also through their connections with the bureaucracy, with parliament, parliamentarians. So in terms of the pure free market entrepreneur emerging on the scene, there's obviously some in Thailand, particularly the people who created the CP group.
Right.
They've done extremely well, not just in Thailand, but throughout the region. They're very big in China.
Right.
They're a good example. The other examples, I would say, are in India, where almost in spite of the corruption and the very heavy interventionist hand of the state in the post-war era, a number of entrepreneurs were able to emerge and create a great deal of wealth. I'm thinking of the Godrej family, the Ambanis, obviously, of Reliance, and also the Tata Group, which has done extremely well. It now has a turnover of more than $100 billion a year, and for an Indian company anywhere, that's a substantial figure.
What I'm thinking about in terms of some of those examples, Geoff, is the fact that many of these individuals or companies have either listed domestically within their market or internationally, like Tata, like Jack Ma's, Alibaba. I think that's where I'm going towards that question, more from a perspective of the fact that there are stock markets that are welcoming potentially foreign investors as well, limiting foreign investment restrictions, or listing in places like the New York Stock Exchange that have really accentuated their wealth through capital markets.
Well, absolutely, because the Tata Group is a classic example of how they have stepped out of their comfort zone, as has the Mahindra Group in India. They've gone overseas. They've looked at investing in various new sectors, whether it's aviation services or automotive manufacturing, financial services, IT. They've raised capital on markets in New York and in London and elsewhere. And these are the companies that have powered ahead. The ones that have been reluctant or for some reason have chosen to restrict themselves to the domestic market have not done nearly as well. The Indian domestic market is huge. It's 1.25 billion people, but in terms of spending power, it's still some way to go. There's a huge middle class emerging in India, but some of the top Indian conglomerates have seen that they can make money in many markets outside of India. Godrej, for example, is very big in Africa.
Right.
Adi Godrej explained to me once that he saw a great deal of value to be had from investing in Africa, just in sort of micro consumerism,
Right.
selling the 1 cent soap or hair shampoo, as he has done in India. He could see that he could replicate that model in other emerging economies.
Yeah, we covered we discussed about India a lot, and I know you put 2 books together regarding India's Growth Wealth Club and India's Store Wars. Do you think you could encapsulate that based on some of the things that we already discussed about?
Look, I've always been a big fan of India. It's got wonderful potential. It's got fantastic expertise in a number of areas such as IT, financial services, pharmaceuticals, automotive, mobile phones, media entertainment. It should do better in manufacturing too, but it's got so many problems that remain unsolved. The most important one is inequality. Even though economic growth has lifted many millions of its people out of poverty, there's still a huge gap between the haves and the have-nots, and between the urban elites and the rural areas of India, where almost 70% of the people live. So against that backdrop, you've got poor infrastructure, you've got massive corruption in the police, the judiciary, and the bureaucracy. You've got inefficient government. You've got really bad supply chain for perishable foodstuffs and other goods. You've got poor education, apart from some elite areas. You've got health and welfare that needs to be massively upgraded. Social divisions. You've got rivalries between the central government and the state governments. And you've got an internal rebellion. You've got the Naxalite, which is a Maoist-style insurgency going on in the country. And you've got a very uncertain external security situation. So India has got more than its share of problems. However, it's got some really, really good people, and it's got a wonderful sense of vibrancy, and I really want to see it do well. Many, many people have done well. As you know, many Indian corporates have gone overseas, but corporate leaders have stepped outside of their comfort zone and have gone overseas and have done really well. They've been well educated in places in America, Canada, Australia, the UK, and elsewhere. And so there's a great wanderlust in the Indian business fabric that attracts people to go overseas, and then when they see opportunities back home, they happily come back home and try to create new businesses and new wealth. And I think that's really one of the great factors in the Indian success story, if you can call it a success story just yet, in the same way as the overseas Chinese want to give back to their mother country. So the non-resident Indians working overseas want to come back and contribute to the Indian economy.
Let's wrap this up by discussing about your most recent project, which is Earth Wars, the Battle for Global Resources. I talked to a lot of people about this from a commodities perspective, from a resource depletion perspective. Can you help underline the key thesis of this book, and what are some of your observations about it?
Well, as you know, China is now the world's biggest energy consumer, and it will stay that way. And so China is focused on how best to source its own energy needs. Now, it's got its own coal, oil, gas, nuclear, renewables. I mean, it's very big in solar and wind power. Plus, it imports oil and gas from the Middle East, from Russia, from Southeast Asia, from Australia. And so what it needs to do, and what it is doing, is locking in that security of supply. So whether it's domestic supply by improving its efficiencies at home, or whether it's doing the deals that will grow its external supply base. If you think about the growing network of pipelines that China has created into Central Asia, into Russia, into Burma or Myanmar, all of these are designed for one purpose, and that is to ensure security of supply for China's energy needs. Now, really, although China is so important to the world economy, the biggest change in the resources battle, I think, we've seen in North America. It's come from North America because the United States has turned the energy world upside down in the last 5 years because of its ability to produce oil and gas from the shale formations. That's really put the pressure on so many of the oil producers, particularly in the Middle East. Some of them have responded with increased production, and of course that tends to lead to lower prices. And as a consequence, we've seen some temporary suspension of the shale plays. But because of North America's, I guess, unique situation with pipeline network, with the technology, the skilled crews that it's got access to, the capital, very deep capital markets, and that entrepreneurial spirit in the oil and gas market. So all of those factors create this unique situation in North America, particularly in the United States, where shale provides it with it's really the ace in the hole for North America. You can bring back the production quickly when the conditions improve, when the market says it's now the time is right for you to bring your shale oil and gas back on. The American producers can do that very quickly, and so the US has the right set of circumstances to fully exploit that energy advantage.
What about China's shale resources, and what about the limitations on the US's ability to export the shale? I've gone into many different discussions with many different individuals about that, and we haven't really identified a clear export destination if you're going to emphasize this unconventional source of energy from the US. Australia, which you're currently in, and Qatar are probably in a much more advantageous position to export to the places like Japan, and China might be able to tap into its own shale resources in addition to all those pipelines. I've spoken to people in which we've identified that maybe there might not be a real appropriate destination for all this potential shale exploration that the U.S. is doing in terms of exports.
Oh, look, I think that the export market for the United States is relatively limited, but that's not where the main game is. It's the replacement of imports, so that the United States, by supplying its own energy needs, can reindustrialize many of its, its manufacturing sectors that have been hurt by overseas competitors, largely because of lower production costs, particularly labour, and sometimes the energy input is a key factor. But the Americans now have the ability to source relatively cheap energy at home, and that allows them to reindustrialise. I think that in the case of exports to China, that's a very marginal play for the Americans. I would think that China will continue to try and develop its own shale resources, but it has problems with water because, as you know, fracking requires a lot of water, and China has a water shortage. It's short on actual quality and quantity, and there's a hell of a lot of environmental degradation going on in China, and the Chinese have recognised that, and they are really attempting to try and roll that back a little bit by going for clean sources of energy. Nuclear power is one of those. Natural gas is another. The natural gas is going to come from the Middle East, particularly from Qatar, and also from Australia, which is a large and growing supplier to the Chinese market, along supplies also to Japan and Korea. So China has massive amounts of coal, but it's quite dirty coal. So it's got a big job in retrofitting or upgrading its coal-fired power stations. It's got a nuclear option in power, and it's also got solar and wind power, and it's gone a long way towards upgrading its solar and wind power capability. And of course, the big thing here for the future is battery storage for renewable energy systems. And I think this is where we'll see some tremendous strides. Certainly in America, where you've got Tesla and the its gigafactory, you can see those big battery systems being created in the United States, in Japan by companies such as Toshiba, where they're creating utility scale battery energy supply storage systems, hook that into a wind powered power plant, solar farm, and you start to change the equation a bit with renewables. Renewables are still quite expensive compared to cheap coal and cheap natural gas, but I think there's a growing role there for, particularly in China, for renewables with the addition of battery storage. So I guess my take on the resources thing is that America has got this great resource called shale. It'll continue to exploit it to its own domestic advantage. China will continue to try to secure its energy supply through multiple deals around the world and through upgrading its own resources. And people will keep working along the renewable path, aided by the role of battery storage.
Well, thank you, Geoff, for your this enlightening conversation. Let's try to catch up sometime soon.
We hope you enjoyed this mastermind session. If you'd like to contact Peter Pham or Phoenix Capital, please email info@phx-cap.com.